My dad, the one thing that he learned of life was like, I didn't necessarily do all the right things in life, but what I'm gonna do is I'm gonna be the best that I possibly can as a father to essentially teach my kids how to pursue something, show up for them, and just be the best dad possible.
Well, welcome to this week's Wealth Builders Podcast. I'm Conrad Metcalfe, Vice President of Wealth Builders, and I am so grateful that you joined us today. Wow, this is going to be an amazing podcast. I have got Dominic Rufran with me. How did they do, Dom?
Hey, you did absolutely amazing. One of my business partners, he still butchers it. And we've been in partnership for 8 years or so. And so you crushed it first try. I really appreciate it.
That's so awesome. And Dom is with us. We're going to be talking about a really interesting topic of how to use life insurance to help finance real estate. And plus, he's got this incredible story. He's a CEO, entrepreneur. So we're going to have a lot of fun talking with Dom today, who is, are you the owner or CEO?
CEO, president. My business partner, Caleb Williams, he's the founder of Better Wealth.
Okay, great. Of Better Wealth. So we're going to have a great time. And before we get started, I want to make sure that I share with you our free download today. And this is a booklet from Billy Epperhart, of course, our founder of Wealth Builders. And it's the top 10 secrets of real estate financing and how to grow your portfolio faster. This is a great little booklet, and we want to provide it for you in a digital download completely free. So you can click on the link below, and this will show up in your email, and you'll become part of the Wealth Builders email list as well. So you get all sorts of updates as to what is happening. Also, I want to remind you real quick here that our big event is coming up in February. It's a Wealth Builders Conference. And so you want to get registered early. We still have some early bird pricing. So you can go to wealthbuilders.org/events and get registered. Also, be sure that you join in if there's seats left on the VIP package. All right. So Dom, I am so grateful that you joined us today. You drove down from Denver, which I really appreciate. And you've just got this great story. We were chatting a little bit, and you were telling me about how your ancestors came over from Italy, right?
Yep.
But also that you've got this great background. So you are very successful in business. But before that, you were playing D1 football and even started to go pro with the Atlanta Falcons, right?
Yeah, that's correct.
Oh my goodness. So tell us about that. I think that's a fun story, and just a little background about you so our audience can get to know you.
Yeah, of course. First and foremost, thank you for having me. I'm blessed to be here. It's been a lot of fun so far. But yeah, I actually grew up here, Colorado Springs, very poor, trailer park, food stamps, welfare. And my dad, the one thing that he learned of life was like, I didn't necessarily do all the right things in life, but what I'm going to do is I'm going to be the best that I possibly can as a father to essentially teach my kids how to pursue something, show up for them, and just be the best dad possible. And so what he did is introduce me to football. And it was at a very young age. I was like 2 years old. I still remember Monday Night Football, like watching Terrell Davis and like playing catch at the age of 3 and doing push-up, I remember from the earliest age just like being obsessed with the sport. And I pursued it with my whole heart, became obsessed, slept with my football, told my teachers that, hey, when I grow up, I'm going to play in the NFL, even if they thought it was unrealistic. And so I did. And I got a Division I scholarship to the University of Wyoming. I played there 4 years, broke a couple records, got to meet some really incredible people. And then I got an opportunity to play in the NFL for a very short period of time with the Atlanta Falcons. And that was back in 2015. And so, yeah, it's an incredible experience. I learned a ton about leadership, a ton about discipline. It's one of the greatest life lessons that I've ever experienced. And I take it with me now in discipline in life, my family, just so many incredible lessons from it.
That's so cool. So, wow, that's quite a story. So you grew up, like you said, in poverty on welfare. And one of the things that had to be, you had to have a major mind renewal, right? Because when you grow up in an environment like that, although it sounds like your dad really helped, like he didn't want you to have a life that he was potentially living in that way. Exactly. But how did you actually get a wealth mindset coming from an environment like that, because there's a lot of people that have grown up like that too, and they don't know how to get that new wineskin.
Yeah, the sports created confidence, right? So I think doing something long enough creates a confidence in yourself that you can do a lot of things. But when it came to like the next level of like personal development and growth and wealth building, that really didn't come till college, and it was not because of college. So I want to be very clear on that. When people ask, hey, what did you go to school for? And I say, I got my degree in football, right? And that's what I tell people.
You were just trying to do whatever you had to do, right?
Exactly. Whatever I had to do to make it. And honestly, the story with football and school and how all that happened is I was a pretty good student just because of the discipline and wanting to get a scholarship to go to football. And in college, my first year semester, I actually got a 3.5. And then I got plugged into a network marketing company at the time. And it was the first time I ever heard about it. And that kind of shifted my mindset a little bit, because then I started reading books and I started podcasts, and I started doing the whole thing when it came to just like feeding your mind and your spirit.
Yes.
So all of that. And ironically, when I go to class, I would stop reading the books that the economics teachers would actually provide, and I would be sitting in class looking down, reading like Rich Dad Poor Dad and How to Win Influence Teacher. And so the problem was, though, is the very next semester, I ended up getting a 1.2 GPA. And my sports advisor was like, hey, you got a 3.5 the previous semester, but you got a 1.2. So he's like, you're fine. But if you get below a 2.0 again, like you're actually suspended, like from playing. And I was like, well, the reason I'm here is to play. So I'm not going to do that. So I made sure to get at least a 2.0 to actually be able to play. And they said I needed a 2.5 to graduate. And so I ended up getting a 2.6 just to making sure that like I did just enough to graduate, just enough to play. And from that moment on, with all of the growth of personal development, Rich Dad Poor Dad sparked everything. From that moment on, I had a mindset of, I'm going to pursue something of significance outside of sports when sports was done, and around the idea of like entrepreneurship and sales and marketing and finance. And sure enough, when I was done playing football, the first thing I did is I went door to door and I said, hey, Robert Kiyosaki did it. Other people like that have had success say you should get your teeth knocked in the first couple of times. And from there, started trying a bunch of things. And then I got plugged into Better Wealth. And here I am, it's now 10 years later. So it's been a great journey.
Amazing. What a great story. So is your dad still around?
He is. Unfortunately, he's kind of sick right now. So him and I, our relationship's not necessarily how it used to be, but he used to be my best friend. But yeah, he's still around to some degree or another. He lives here in the Springs.
I bet he's like so proud of you, just the changes in the pursuit that you have had in your life. And that's really something. Rich Dad Poor Dad is a really good book. Mm-hmm. That's one of the books that we have the Karis Business School read.
Amazing.
With some other ones. I'm just curious, is there any other book that stood out that just really helped you on this journey?
Well, I think at this stage of life versus the stage of life I was at before are way two different stages of how I look and read books. Before, I would just read any book where I was recommended. And so I went down the typical like Think and Grow Rich, How to Win Friends and Influence People, like Man's Search for Meaning, all those really good foundational mindset books.
Yes.
And then I got to a place now where I usually read a book that's based off of the subject matter that I'm trying to accelerate in. And so if it is in sales, marketing, or like something that is a tangible skill, I will go read that book. So as of late, like I've been reading books more along the lines of like EOS and the E-Myth and, Building Great Organizations, The Advantage, like all business books that are foundationally around culture and how to grow organizations. So foundationally, there's all the really good books that most people hear about. I think that's where everybody should start. But at some point you have to graduate and go more towards like the more narrow book that can help you in whatever phase of life.
That's really good advice. A lot of times people think, oh my gosh, I have to have a mentor that's actually going to help me to succeed. But really, reading books, watching podcasts like this, get being mentored by people that you have no access to.
Yep.
And you were mentioning too that you were listening to podcasts and just grabbing hold of things. And I really like this story, Dom, because I think sometimes people feel, I know I've at times in my life even felt like, hey, I see someone over here succeeding, but that's not for me, right? And your story is like, no, it's for everyone, and you pursued it. And, here you are. We're talking about building wealth. And in particular, one of the areas that you have become an expert in is life insurance. And one of the reasons we got connected was through Alden Armstrong.
Yep.
And I still remember his dad saying that you can be your own bank, and there's a way to pursue that through life insurance. So maybe you could just give us a little bit of background of how you approach life insurance and introduce us to some ways that life insurance can be a tool to help us in real estate investing in other areas of building wealth.
Yeah, life insurance is fascinating because if you talk to any person on the street and you're just having a normal conversation, you bring up the word life insurance and instantly people start to squirm. Right? They're like, oh.
It's like the snake oil thing. Like,
yeah, exactly.
No, you're a
It feels
salesperson.
scammy or slimy and people want nothing to do with it. And a lot of that has to do with how it's sold, first and foremost. I think it's like that one thing that people went to door to door and knocked on. Like, it's the first door to door sales product that people ever got introduced to, right? And then now what most people know it as is a tool for death benefit protection, right?
Yes.
And death benefit protection is super important, right? And we preach that, and we know that the value in the death benefit, it's amazing. It can help protect families for income. It can help pass money down generationally. And so the death benefit is foundational to most people's financial portfolios if they're wanting to help protect their family. Now, most people don't know that there's the other side of life insurance, which is the cash value or the savings growth component of it. And that's where we specialize in, is we really specialize in helping people build high liquidity cash value policies. And
Interesting.
yeah, and there's a difference between a high early cash value liquidity policy and a policy that doesn't. And what I mean by that is, as a life insurance expert, when you're helping people, you can design it for higher death benefits and lower liquidity, or lower death benefit and higher liquidity.
So you
right?
you have options. You don't have to just accept what maybe the standard is.
Exactly. So the traditional standard, and what you hear people like Dave Ramsey talk about when they say it's a scam, or you get very low growth rates and all of these different things that you hear people talk about online, that's more of the traditional, like, permanent whole life insurance, where you don't get any liquidity in the first couple of years and you really get all of your money back. So the amount of money you've contributed, you can see equal that of cash value, sometimes as late as 20 years. And so if you're a real estate investor or somebody that wants to use the liquidity of funds, that does you no good. That's not a policy you want to do. And ironically, for better or for worse, when you design a policy with low liquidity and high death benefit, the agent actually gets paid a lot more. And so you hear about it less often, I think, in the space too, because of that exact reason. And so what we've done is we've created a model where we said, okay, we're going to focus on entrepreneurs, we're going to focus on real estate investors, and we're going to be specialized in what we call the and asset. And the and asset is a high liquidity whole life insurance policy that gives people lots of liquidity early on to borrow against this as a leverageable tool, where they get tax advantages and they get all the other benefits of life insurance that they can use for their real estate investing. And so it just is it's just an amazing place to store liquidity at the end of the day.
So is there a death benefit that is still attached to it? And then it just, like, walk me through a little bit about how this works. Maybe give me a scenario of somebody that has used life insurance with one of your products to fund their real estate investing.
Yeah, amazing. And I'll use myself as an example, because I actually love real estate. Huge fan.
Yay,
I think
good.
It's an incredible
You're
tool.
in the right place.
Amazing. Love that. There's only so many financial assets out there that give your dollar more than one job. And real estate is one of those, right?
Yes.
And you get the appreciation, you get the tax advantages, you get the cash flow. I mean, you could go on and on about, there's 5+ different advantages from just real estate alone. And life insurance is the same. So now when you get an asset over here with real estate that has multiple, get your dollars more than one thing, and you get life insurance that gives your dollars more than one thing, well, the two of them together, now you have your dollars doing 20+ different objectives. And that's why together, I think it becomes supercharged. And that's why I personally love real estate. And for me, I'm so invested into business and the company of Better Wealth and what we're building that I don't necessarily have the same amount of time and energy to put into fix and flips or, finding rental, like just being more integrated into it, because that's a full-time job. If you're going to do it extremely well, right, at a high level and be competitive with it. So for me, as of late, I've been more in maybe like the syndication world where I can read a deck page, see if there's good returns, et cetera, and then I can go invest in those opportunities. So I'm a huge proponent of real estate. Just want to say that, like, I know this real estate, this is great. I think it's one of the greatest assets there is. And so for myself, what I do is I take my extra liquidity that's above my expenses, the savings that I would put towards something like real estate, an opportunity, and I put it into life insurance. And life insurance becomes the storage bucket. So it's an alternative to something like a savings account. Because if you look at long-term growth rates on a savings account, you get maybe 1% to 4% depending on the economic environment and interest rates. And you also have to pay taxes on that, the growth on it, which people don't normally think about. And so for us, we say, well, what if we could store money into something that gets a long-term 4 to 5% growth rate, which is what life insurance does. You get tax advantages, it grows tax deferred, and you can access the money tax-free. And it has a permanent death benefit that you also get as well. So if you're going to have a death benefit, right, term, you only have it for a certain amount of time. After 20, 30 years, it falls off. The permanent death benefit you get forever. So now I have protection for my family. I got a storage and liquidity that gets 4 to 5%. I also get creditor protection. Okay,
talk about that. What do you mean creditor protection?
Yeah, so depending on the state, so I want to have that disclosure. So every state is different. I know you live in Florida, and so, or at some point in time, maybe.
Yeah.
I know you live in Colorado too, but you have residence in Florida, right?
Yes.
And so Florida is a prime example of you get unlimited protection in regards to the cash value that's stored in your policy. So if somebody comes after you from a lawsuit or creditor, anything like that, like they can't touch it. And so it's just another safe haven asset with lots of protection that's naturally built into it. Every state's different. So like I live here in Colorado, it's up to like $250,000 of liquidity, which is still great, right? Nonetheless, it varies per state. So it's got the protection built in for lawsuits, creditors. It also has some things like if you're sick chronically for like cancer, things like that, you could use the death benefit to help you stay alive and pay for some of your other asset, your other expenses. And so it becomes this multi-utility tool that I now get to use for storage, safety. There's guarantees built in. You can't lose money. And so it operates like a savings account on steroids. So as a real estate investor, if you're looking for a place to store money that can grow and then still use the funds other places, it's just a way better alternative than storing money in a savings account because the savings account doesn't have all these extra benefits.
That is so interesting. I was not aware of many of the things that you have talked about. And I was in banking for 25 years and amazing. I mean, around life insurance, but I have not heard this, Dom. So this is really helpful. Yeah. I want to go back to just kind of retrack the way this works. Okay. So let's just say, I'm just going to give you a scenario. Okay. Perfect. Let's just say that, that I inherit money, maybe $100,000. And I'm trying to figure out what should I do with this? And I do want to use it for real estate, but I maybe don't want to take the cash out, if that makes sense. So you're saying that I could put it into a whole life policy. So in that process, do you have to go through tests, health tests and all that? So yeah, let's talk about that because that is something different than just putting it in a CD and then borrowing against it.
Yeah, I would say that is one of the disadvantages of this process is that you do have to qualify from a health perspective. And so if you aren't necessarily healthy or are going through some health issues, there could be a case of denial, which means it would be off the table for you specifically. Mm-hmm. There are other options to where you could get it on a spouse or you could get it on kids or you could get it on a business partner. So there are still other ways to store money in, even if you want the one that's healthy. Mm-hmm. And so the process does take a little bit of time because if you do go to a CD or money market, something like that, you go to the bank, set it up, you can get it the same day. When it comes to this the process could take anywhere from 3 to 6 weeks, right? Because you have to go the health process. Usual standard life insurance, sometimes you just have to do like blood and urine testing, things like that. But there's companies that we work with that can bypass that depending on age and health and things like that. So yeah, ultimately what you would do is you'd go through that process, you'd get an offer of like, here's your health rating. And then what we'd also do is we'd have conversations. I'd ask our questions. I'd say, what are you trying to accomplish? What are you trying to use it for? What is your real estate investing portfolio? What is your real estate goals? To making sure that we design the policy to match specifically for your real estate goals. Because we want to make sure that all of it's working together and not just like design something in a box. So it's super important for us to know your goals, what you want out of life, what you're trying to accomplish. You know, we at Better Wealth, we have this mission to helping people live a more intentional life and use, instead of rate of return being like the metric for success, which I think a lot of people focus around, we want to focus on intentional living being the result that we're looking for.
That's so good.
And that'll be different for everybody, right? Some people, based off of their DNA and what we, think that if they're looking for cash flow because you want to retire and live independently and things like that, well, then something like real estate is an incredible tool and asset for it. If you don't want to be somebody who can think and build and be creative and you just want to be a W-2 worker, then sometimes the real estate may not be the best for you, right? So we need to get really clear on your goals and then plug in the life insurance to help you get there based off of that.
That's so good. So there's a health process, which with a death benefit, it's not a surprise, but it sounds like you make it as easy as possible for people. And then the money goes into the life insurance policy and you choose one based on that. If I wanted to pull money out, is there a percentage? Like if I put $100,000 in, like what percentage of that becomes available? Yeah,
it's great. It's a really, really good question because sometimes people get caught up on this concept because when you put money in, and if you're the Dave Ramsey of the world, they're like, you put money in, let's say the $100,000, and you get zero to be able to use the first year. It's like, well, that's terrible, right? And so what we do is we design it to a way where you can get probably close to 80 to 90% liquidity within the first year to borrow again. And first year is with like first 30 days. So you put the money in, the policy gets funded, and then we usually tell people within 30 days you can start using it and accessing it.
Okay.
So I'd say 80 to 90%, depending on the design, the company that I work with, you can get access to.
And so while it's in there, it's earning 4 to 5%, which it would be, earning if it was in a money market or something. It has the death benefit that's attached to it. The money that you use is not, it's tax deferred, basically. So you can take the money as tax deferred. And then is there a credit process if I want to take the 80 to 90% cash value? Do you pull my credit? Do you do an application? What does that look like?
These are all great questions. All the heavy lifting happens at the beginning. To get to the life insurance. They don't do your credit score or anything like that when they go through the process, but they may ask a question like, have you filed for bankruptcy? And usually if there's like within a 5-year window, then they may ask other questions like what for, what happened. But once you get the life insurance set up and in place and you've actually funded it, at that point it's very, very easy. Depending on the company, it may just be a call, it may be a quick form. I've had it to where I can go on an app on my phone and I've just literally answered 5 questions and I requested it and I've seen it as quick as 24 hours in my bank account after that. And there's no credit check. They're not asking crazy questions. A lot of it's like, are you using this for something scammy or a divorce or something like that? Like they want to make sure things are obviously legal and kosher, but they're not doing any hard checks, nothing like that. At that point, it's your money. It's in a safe place and it's easily accessible.
That's really a benefit too, because a lot of real estate investors, if they're underwritten, their debt to income ratios are not going to line up because of course our goal is to show as little income as possible, right? So that process is really big for real estate investors because a traditional bank, and I don't think that it's like this with investment companies or whatever, but traditional banks, even if it's a CD loan, a certificate of deposit loan, they will underwrite you. And it's like, it's my money, right? And so I think that's a real plus as well. And then you're able to take that money, invest in real estate. And I'm expecting that, let's say somebody uses it for a flip. They would take that money out. They would be able to put it back in after the flip, right? And then, is that correct? So the money can go in and out?
Yeah, so the easiest way that I like to help people understand is something that's relatively easy to them that they're used to. And so for your audience, they're probably used to HELOCs, right? I would assume, right?
Yeah,
people understand how HELOCs, right?
Exactly.
And so with the HELOC, it's essentially all it is a line of credit, right?
Yes.
And so when you use the HELOC money, right, you could go put it for real estate, but the asset value of the house never actually went away. Like it's still worth $600,000 and you got your line of credit for $500,000. And so once you use it, right? Because you're not actually taking it out technically. You're just collateralizing. You're borrowing
against it. That's
borrowing
true.
against it, right? And so it's the same thing with life insurance policy. You're borrowing against the technically the death benefit, but we'll call it the cash value because it makes it more simple. You can go use it for real estate, right? It could do its thing, get 8, 9, 10% over here. If you ever sell the asset, then you can just take the money and you can replenish it, and then the line of credit is full to use again. And that's the cool part about life insurance specifically is that in real estate with the HELOC, there's a lot of appreciation in some asset classes, but some may not necessarily grow maybe that aggressively, or maybe it's more stable, or there's downturns in the market sometimes. And obviously it's a great asset class. So you're not worried about like long-term it going to zero, like something else. But with life insurance, it's always guaranteed to grow. So every single year you have access to more liquidity than you did the previous year.
That's so good.
That means that I have the ability to use it more and more for more and more real estate down the road, because this bucket of money is always guaranteed to keep growing and compounding. So instead of, in a normal business line of credit, you got to go request a line of credit, right? In this instance, you don't request anything, it just grows. And then you always have more access to the liquidity bucket to be able to use it.
Wow, Dom, this is really very, very interesting. And I think something that it kind of adds to a real estate investor's potential or possibilities. One more question, I know we're almost out of time. Can people use retirement funds to put into this life insurance?
It's a great question, and I would say for the purposes and concepts of what we're talking about, you technically could, but you still have to go through the same processes of paying taxes and other things like that. So with taking the money and using it, so there's no like fun loophole where you can essentially like go through the back door and not pay taxes and put it in this tax advantage account. You would have to, pay the taxes and then fund it that way, which that is a strategy that a lot of people do use sometimes because, depending on their age and depending on their goals, right? If I'm a 35, 40-year-old real estate investor and I have money in a 401k and it's locked up and tied up, you lose access and liquidity until 59 and a half without penalties, fees, and all those other things. And so they're like, well, I have to pay taxes now, and I have to pay taxes when it's bigger. So like, let me pay taxes when it's smaller. I then can actually use my money today to go invest in the real estate versus waiting for a rainy day into the future. Because like, I want to live intentionally today. I don't want to live intentionally 20 years from now because I know I'm going to be older. I know I'm not going to have the same goals. Like today is the day that I want to start building wealth. So why wait?
That's so good. Wow, Dom, this is good. And if you want to learn more about this product, we actually have a URL set up as wealthbuilders.org/insurance to finance. And you can click on the link below. I know that said long URL, but that will actually send them right to your page that, did you say, what's it called? I want to say and asset.
Yeah, it's andasset.com is what it is. And we actually have a book that our founder, Caleb Williams, did write, and that I think explains it extremely well, that we're also giving away for free for people, anybody that wants it to.
Wow, that is awesome. Okay, so use that wealthbuilders.org/insurance to finance, and it will get you to the page that talks about this life insurance. Can they get the free book on that page too?
Yeah, and what we actually might do, I know for your media team editor, it's like they're very flexible. What we may do is just actually have a link that goes directly to get the free book. Okay. And that way they can get the book, and then from there if they have questions, we can follow up with them on it. Okay,
awesome. And then you're part of the Wealth Builders. The reason that Dom is here is he's part of our Wealth Builders network, which is providers that really support the Wealth Builders family. I should have mentioned that at the beginning. So Dom he's a platinum provider, and so we just really appreciate you being a part of this, coming and seeing this, or being with me today in the podcast. And also you're at some of our events.
Yeah, and I'll be there this weekend.
Yeah, we've got an event this weekend.
I'm excited.
So a table, you can go and talk to Dom. Also, I'm going to have him in on a creative financing workshop just to explain more about this. So you'll see Dom around. So Dom, thank you so much for being a part of this. I really appreciate it. This has been very interesting. I've learned a lot in this conversation for sure. And just thank you, all of you, on behalf of Billy and Becky, for being part of the Wealth Builders family. We love and appreciate you, and we really look forward to seeing you at the upcoming Wealth Builders Conference. Stay in touch and share this podcast with people that you think would be interested in the topics that we talk about. So God bless you, and have an amazing rest of your day.